Hi, for the pipspredator users, of course it goes without saying, and I am stating the bloody obvious here, but when you're looking at, as we are doing here, for instance, Google 15-minute bars, you can pick different timeframes if you wish, but 15 minutes seems in this market sensible one. Let's just go back to, the middle of August, okay, and how things are fared. People have asked me, okay, well, what about the trading part? Well, no. On the markets, people are talking about investing into these stocks. What about the trading just to augment some of the investment returns? And how does pipspredator indicator work? Well, the indicator showed a buy there. It showed another buy there. We had the short there, which didn't work. That's fine because the buy more than made up for it. The short there got us out flat because the buy then kicked in. Another buy kicked in. Again, you can see the shorts just aren't working, okay? The market's even expecting they're not. They're going sideways. That's fine there. The buy didn't work. The short worked a little bit. And then again, you had the win. Well, what does this tell us? And we're up here at the moment on this. First of all, it tells us, of course, there was a lot of money made by going long. Not rocket science. We didn't know that ahead of time. Nobody knew we were going to get this crazy rally. Okay, so if we didn't know we were going to get this crazy rally, what's the point of trading? What's the point of using an indicator like this, which looks at momentum across multiple time frames and multiple indicators? And gives us some indication of direction and increased probability of moves. Well, the whole point of it is we didn't know it was just going to be a straight buy and hold bet. And well, we don't know that. It allows us to take small bets, small rises, get in, toe dip, make the money, get out. Okay. And the other thing it does, by setting up where the stop loss is going to be, you can see it there. So we get the entry signal at the green arrow there and the stop loss over there, which is a stepped trailing stop loss. If you don't know what that means, go to pipspredator.com. Okay. What that does is it allows us to manage risk, control risk, as do these numbers here, which tell us how much risk exactly we're taking at any moment. And by risk, it's really simple. It's what John Paulson, the legendary hedge fund manager, said. I want to know what the worst case is in terms of my losses. And this is great because at least we know what the worst case is. And because we're dipping in and out in a market which could tank at any moment, it allows us to capture a bit, go in and out, in and out. And of course, every trade isn't winning. If we look at this, 1, 2, 3, 4, 5, 6 were winning. But how many weren't? Well, 1, 2, 3, 4, 5 weren't. So wait a minute, 6 wins and 5, let's call them losses. Hey, that's almost 50-50, Alpesh. Did you make money? Well, as you can see, and you might say, well, that's easy in hindsight. Yeah, well, this was one where even in hindsight, we had to still dip in and out because there isn't a crystal ball telling us the future. My point is this: the whole point of a quality indicator, a quality piece of algorithm work like this is that we have the ability to dip in and out, and that allows us to manage our risk. And even with virtually 50-50, we are getting into the capital as well and getting the returns. That's trading in essence. That's bang up to speed of what's happening.